Welcome everybody to the Real Dealz podcast, one of the top-ranked real estate investing podcasts for the last 7 years. This is the place to be for investing strategies you can actually use, expert interviews, and of course, some good old-fashioned entertainment. Now, here's your host for the show, Elliot, the REI guy, Smith.
What's going on, Real Dealz podcast listeners? I am hoping that you guys really enjoyed that last episode with Tucker. I thought it was awesome doing the interview. I always get this nostalgia feeling when I interview him. Just everything's kind of came full circle. So really excited about his new show. I know they've been putting a ton of effort into it and can't wait to actually hear it. So anyway, this week, this is going to be a solo show. I'm going to talk. There's been a lot of news lately. And from what it seems like, the retention's pretty good. So I think you guys like what I have to say. Again, I don't know it all. And, please reach out to me if you have a different opinion on things. I just want to try to learn as much as I possibly can. But at the end of the day, we don't have a crystal ball. I follow Meet Kevin quite a bit. He always seems like he knows everything. And when he's up and his stocks are doing good, he's the smartest guy ever. And then all of a sudden he's, crazy changing everything. So I just am seeing the information and trying to figure out how to best use it in my own business. So the good thing about right now in our business is we have one more property to close. It's the 16 unit, which we're kind of getting screwed on with interest rates because we didn't lock interest rates because it's a bridge loan and they don't lock until we get approval, which is after the appraisal. And so kind of frustrated. Those are going to be, they're basically 225 basis points or 2.25% above the 10-year U.S. Treasury. So thank God that started coming back down. I think it was like at 284 today, so 284 basis points. So we're basically looking at, 5%, 5%, somewhere in there. So anyway, shouldn't be too bad. We got very fortunate on our other loan. So luckily this is the last one. We are taking a hiatus and getting everything stabilized. Actually got, if you're watching this video, pretty excited. I got some States Avenue gear. First company I've had that I've actually had like full on gear. So that is going really well. We put an AirBnB in our 32 unit that we bought in November and it is crushing it. So if anybody has any apartments, duplexes, fourplexes, things like that, I would suggest trying to do an Airbnb. This one is centrally located in a very good place, but it's a 1-bedroom. The other 1-bedrooms are renting out for I think they're $11.50. We rented out every single day in April except for one day, and that's because we had 2-day minimums. We put it on there on Airbnb, I think April 2nd, booked the whole month. Now, we were a little bit lower in price because they had like 20% off new listings or things like that. But even when we raised the price, we still got a ton of bookings. So if that keeps going, we're renting it out right around $95 a night. We're going to probably double, if not triple, what that unit would get in rent. So we're actually doing a second one now. We have 10 1-bedrooms. So if they all work good, we'll just keep on doing them. So pretty excited about that. We have a lot of good things going on. Our $2 million rehab for our 31 unit with the lot that we bought about a month ago. There's 20 tenants left in there. They didn't have, I think, 11 or 10 tenants units that weren't rented out. Perfectly good shape, by the way. Maybe just needed a few things, but they're just dated and they hadn't rented out some of them for 10 years. So when I say look for Normans. They're great leads. But we gave everybody notices. So the clock is on. We're going to have a fully empty building. We're going to go through this. It's basically going to be ran like a new construction project. And so people are going to, one right after the other. The siding guys go in, the painters go in, the roofing guys are there now. Inside, you have demo, then you have kitchens, bathrooms, all these different things. But everybody's going to go from unit to unit to unit and get those things done quickly as possible. Now, luckily, on those bridge loans, with that one and our other 32 unit, those are the 32 unit that we bought in November is a 5-year term, 18 months interest only, and that's at 3.75. Interest rate does not reset. once we get out of the interest only period. Awesome. The other one that we're kicking everybody out, that is at 4%. So for the most part, our portfolio is actually very good and well financed, I would say, I guess, well mortgaged. I wish I would have pulled some more debt out on some of our single family and duplexes. We're about across the board on those. We're like 40% LTV. I think we have like 10 doors. So not a ton, but wish I would have pulled a little bit more money there. We have a 25 unit that we were going to go for a refi. Now we're going to go for a supplemental loan, but we'll see where those rates are as well, because that one has a really good, I think it's 3.9% interest rate. So anyway, that's what's going on with me. But like I said, we're putting a hiatus on buying multifamily for a little bit unless they're in our core area. We are going to put a little bit of a slowdown on our flips unless they're entry level. Even if they're entry level, I'll probably still wholesale most of them out. I am tied up in a 8.5 acre piece of dirt that I've been looking at for quite a while. I've actually been trying to get a hold of the owners for years, but they were just really challenging. They're Asian and every address was a dead end. They're in China. So anyway, it got listed. We worked with a broker starting in February. Again, it took forever to get them to sign the listing, but we finally got it signed like 2 months later. It's a commercial property, but it's perfect for multifamily residential. Has 3 access points right by the freeway. It's right by another multifamily piece. And Pasco is lacking multifamily dirt. They did a comp plan change, which is a huge deal. And they still didn't allocate very much dirt for multifamily. And if they did, it was on the outskirts. So either in the the less desirable area or in the high priced area, nothing in the center. So we're going for a comp plan change. The cool thing about this, if we can do it and it all works, and that's a big if, I'm pretty sure we'll get this through as long as we don't miss any deadlines or things like that, because it's just perfect for it. But if it goes through, we're tied up for roughly $13,000 per unit. I think we can get 180 to potentially 240 depending on what zoning they give us. But let's say we're at 13,000 a unit. There's a good chance that we can spin that once we get the rezone for 20 to 25 a unit and not actually have to do anything at that point. We just spin it because we got the zoning changed. So again, I had been looking at that for a while. That was my plan all along. Really smart guy that we've had on the show a few times, Tucker's buddy, my good buddy, Artem Templer. He told me one time, know your zoning code inside and out. He said he has buddies all the time making $1 million just getting things entitled or getting the zoning changed or, getting higher density on these things. And all they do is spin the paper. So knowing these things, people, you start out in this business and you say, first off, you're like, I don't like my job. I don't want to trade time for money. So what do? You go wholesale. So you still trade time for money, basically. So then you go flip. And you still trade time for money, even though it's bigger checks, unless you fully automate it, which that takes a while and it's really hard to do. And so, but for most of these deals, you're trading time for money. The difference is your dollars that you're trading that time for gets higher, hopefully. Now, say that we can put this together. That's potentially $2 million right there that we could make on this deal. I have a partner that will split it 50-50, but how much did I make for that time that I spent? A lot per hour. So the more you know, and just like where you're at right now, is as you move up in this business and keep going into different levels, you make more money. So don't just stop at one thing. Always stay hungry. Always keep learning. I stay up all the time going through all the zoning, all the comp plan changes. I sent my buddy partner on this property. We had some our application. And I didn't really think that it was good. They weren't as detailed as I thought they should. So I got on a tangent, spent about 7 hours going through 40 pages of the comp plan and all the things that the city wants to see, measured from like the property to the on-ramps to the school, got it down to the foot, like literally 4,732 feet. Put all these things, made all these notes, and sent it to my partner. He sends me back an email in the morning, because I sent it at like 3 a.m. He's like, hey, manic? Which, yes, that's the one good thing about being bipolar, I guess, and which I don't want to lose, is that once I get on a tear, I start going down rabbit trails. So, but I'm always trying to learn something and stay hungry. There's so many things in this business that you can do, and that's the fun thing about it. So, anyway, The market's changing. On YouTube, I am seeing a lot of things. Literally every other video seems to be the real estate market is crashing. The real estate market is going to crash. Interest rates are up. All these different things. Then one person says that, oh, it's not going to crash because we don't have enough supply and demand. Supply and demand, there's no inventory. Other people say it's going to crash because interest rates are too high. There's no affordability. It's 50% higher to actually own a home. It's the highest point in history of for cost of home ownership. So everybody wants to call it, right? If you've ever listened to Peter Schiff or even Robert Kiyosaki, right? Those guys are always crying wolf. They're always saying the market's going to crash. This is going to implode. We need to we're going into a depression, right? Buy gold and silver, whatever it is. Or there's other people that are always like, the market's always going to go up. There's a lot of people that said that, and this week has not gone very well for them in the stock market because that is getting crushed, and Bitcoin and all that stuff is getting crushed too. But there's people that say it never is wrong. Take Kathy Wood, right? She was a darling investor. Everybody's like, Kathy Wood, she's so smart. She's the greatest investor of all time. Well, she had a really good couple years because she bought in innovative tech stocks, and those stocks had really good run-ups. Well, what did she not do very well? She didn't see that they were going to get crushed. So now she's down so much money. And so everybody looks like a genius in an up market, right? I say it all the time, and I've been saying it for years. I didn't want to coach people because I didn't feel like I knew enough because I hadn't been in a down market. And so, yes, I think all the time, have I just gotten lucky? Well, the nice thing is right now, I think we got lucky enough, if we did get lucky, that we're going to be okay because we have assets that pay cash flow. We have good interest rates. We have them at a very good cost basis. And so I think we're going to be okay. The call center is doing really well, which we're going to have a quick video or recording from Cole and a testimonial from one of our clients that is crushing it. Not so much to push the call center, but it's more to say how he's working his leads and how he's seen so much success just getting started with us. So anyway, I digress. But what is your plan? How are you protecting yourself, right? There's a lot of things that can go wrong. You can't get materials. You can't get contractors. People can't afford the houses. There's so many different things that can go wrong. But in 2020, March of 2020, I screwed up and put the brakes on, and I had some buddies that put the gas pedal down, and they look like geniuses. Well, I got scared. So I feel though, if you swing too far one way or the other, that you're just gonna be wrong majority of the time. Now, where this is another thing where I'm talking about getting educated and learning your business, being in your space. Like, I look at numbers all the time. I'm in CoStar almost every day. That's a commercial brokerage for our multifamily stuff. It's so much resources, really good stuff. Anyway, I'm looking at Redfin Data Center. Most markets have Redfin Data Center. Go there, you can put your market in, you can go year over year, you can see the trends, there's graphs, it's beautiful, but you can start to see trends, right? Now, I listened to Ivy Zellman. I think she's very smart. I think she called the housing crash in 2007, 2005, 2007, but she was also bullish when it's time to be bullish. So they have the Zellman report that they sell, and it's for like new home builders, construction, all these guys, hedge funds. But I think she's very smart. She had a video that she just did. It was about an hour long with a couple other guys. And she made mention that she really likes flip housing in markets where there's not going to be overbuilding because there's going to be a lack supply constraints. So if you think of supply constraints, we have a lot of people probably listening in the Northwest. If you're in Seattle, Kirkland, Bellevue, you cannot build 20 home subdivisions, 50 home subdivisions, 100 home subdivisions. Also, what is another constraint that you're going to run into? Another constraint you're going to run into is permitting times. How long does it take to get permits? Kirkland's terrible. 18 to 20 months to get a permit to take one house down to build another house. Same with Portland, same with Lake Oswego. That's why Tucker moved to Florida, right? So those are constraints that are going to not allow a huge influx of housing, apartments, or single family to buy, or rental housing. So that's an issue. What markets don't have constraints as much? Phoenix, Vegas, Texas, maybe some Florida markets, right? More of your red states, and this is not political, red states that have urban sprawl. And what I mean by that is they don't have mountains blocking them where they can't build anymore, right? In Phoenix, it's just desert. They just open up another patch of desert. Texas, for the most part, just open up another patch, right? Vegas, there's another patch they can open up. So you get people in there. Tri-Cities even has that, which is where I live, right? We have a lot of space that they can open up and build lots of housing. So we're still in Washington, but we could see that. We're more focused, it seems like, on the higher end price point right now, but that's an issue. That's a thing. There's a 500 lot subdivision that they're doing right now in West Richland. However, okay, so if they're doing 50, 100, 500 unit, 1,000 unit, tract homes, well, that's a lot of supply. And if there's a lot of people doing that, which everybody's been very bullish on the smile states, the sunshine states, right? Texas, Phoenix, Florida, Southeast, all those markets, right? So now also they're building huge subdivisions. Well, it's more of a red state. I'm willing to bet it's really easy in comparison to a blue state to get permits to build things. So your time from tying up the property to shovel in the ground to building houses is going to be a lot shorter than it's going to be in a San Francisco and LA, things like that. So that's where I'd rather own rental housing in blue supply constraint markets. Now, where that sucks on the flip side is you have a lot more issues with tenants and a lot more restrictions and things like that. But I challenged my buddy. This was a couple months ago. He said, I'm going to sell all my rentals in Tri-Cities and I'm going to go buy stuff in Arizona. I said, that's stupid. You already have them. Don't sell them. He said, no, I think it's going to be way better. I said, okay, let's just take LA County and Maricopa County for the last 20 years and see what the median price gains differences were in the last 20 years. Maricopa County was like 150 or like 150, got crushed in the 07, and then ended up like 252. This was maybe 6 months ago. Now, LA County was like 250 to 850, right? 4x basically. Phoenix was barely double. Why? Because they can build so much more housing, supply and demand. Again, everything's predicated on supply and demand. So that's to say, I don't know what the housing market's going to do. Higher interest rates suck, but historically this isn't that bad. But houses are really expensive, especially in my area. I'm nervous about, the builders in the $700,000 price point to the $1 million price point. Like, we want to buy a house right now and probably $1 million, which seems really crazy expensive, or build a house. And I don't want to do it because interest rates, I'm going to pay like $1,000 more a month. So I don't know. But the one thing they are saying is people are not going to sell because 80% of people that have a mortgage have under 4% interest rate on that mortgage. So they're only going to sell for life events. Why would you trade a 3% mortgage that you bought this house for $500,000? You can sell it for, say, $700,000, but you get a better house. You can't afford much more than $700,000 because, before at the same interest rate, you could have afforded $900,000, but now with interest rates, you can only afford $700,000. So you're going to get a lesser house. So why would you sell that? So those are things to think about. Being careful right now, staying in good core markets, making sure you're on the right streets, making sure you know your market, having an exit plan, having good margins, wholesaling a lot more is not a terrible idea. So I don't know. There's a lot of craziness in this market. If we get into a major recession, I think we're already in a recession, I believe. Well, not technically, but this last quarter we were down on GDP. I think we'll be in a recession next quarter. The Jerome Powell just announced today, they said, I don't think I can see a soft landing. I can't promise a soft landing for this. They're going to have to drive interest rates something fierce because they have to get inflation under control. And these guys in Congress still want to just keep spending more money. You put a ton of money in the market, this is what happens. So I think there's going to be a bigger recession, not related to real estate, but then could affect real estate. So if there's a huge recession, these companies, stock market value, they go bankrupt, people lose their job, then all of a sudden they can't buy a house or they start losing their houses. So not technically triggered by bad mortgages, but still triggered by a recession. So being in markets with good jobs that are safe. We have a bunch of government jobs in Tri-Cities. So that's a good thought that I would have. But this market, if you're paying attention to the stock market, there is a lot of, the NASDAQ, which is a bunch of tech stocks, just getting crushed. Amazon's down almost 40% from its high. Tesla's getting crushed, not as bad as everybody else, but there's some of these stocks that are just getting annihilated, as they should. They were probably overvalued in the first place. Again, I'm no stock market expert. I made some money once, then I've been losing money ever since. But I still pay attention. Bitcoin getting crushed. It was down at like 26,000 last night for a minute. They had their stable coin thing. They just basically went bankrupt. That's starting to show some holes. There's a lot of things that are starting to show some holes right now. China's locked down still because of COVID. I just read an article that Florida is seeing a big uptick in COVID cases. So being careful. People say, stack cash. This is not a bad time to stack cash. Now, what people say to you is they say, oh, why would you stack cash? You're losing 8% to inflation. Yes, but over a year. How much did you just lose if it was in the stock market? A lot more than 8%. So being cash heavy right now, if you can, and being strategic is probably not a bad idea. I have some buddies that bought 7 figures in the stock market end of March 2020 and early April 2020. They 5x their money. So if they didn't have cash, they couldn't have done that. So this is where it's time to be an opportunistic buyer. So hopefully you guys are in a good position. If you're not in that position, here's what I would do. Listen to this guy that Cole's going to talk to. Get some tips. Go back and listen to Tucker's podcast where he talks about marketing. Listen to some of my stuff on how to get off-market deals. Go start finding off-market houses like your life depends on it. Just go out there and grind and try to get as many wholesale deals as possible and only focus on that. Grind your butt off and just start putting cash away. And I promise you, if you do that and you start stacking a bunch of cash, you will be in such a good position if things really go south. So anyway, here's a quick interview. It's like 7 minutes long. It's really good. Cole just talking to this guy about how he, built his marketing machine. He's a brand new wholesaler. He's crushing it in Phoenix, which I turned people down multiple times when I was running the sales for Call Magic in Phoenix and saying, no, you got to have a bunch of callers. He has 1 caller in Phoenix and he's crushing it. So I was actually pleasantly surprised as well. So hope you guys get a lot out of this. Again, please shoot me a message. I get a ton of messages from you guys out there on Instagram. I love having conversations. A lot of times I'll pick up the phone, I'll call guys or girls and have a conversation with them, walk through some thoughts they might have, and just give my opinion. Again, at the end of the day, it's just my opinion. I was wrong in March 2020. I could be wrong here, but I'm a student that's always trying to learn, and I try to find good people to listen to. Again, Ivy Zellman, I think, is a fantastic person to listen to on all housing-related issues. And also, if you look at Black Knight mortgage data, that's really good to get mortgage data. And also Redfin Data Center to go see a lot of housing statistics where you can compare over the last 10 years. So hope you guys enjoy this quick interview with Cole, and I will catch you guys next time.
All right, Real Deals podcast listeners, I want to talk quickly about our show's sponsor, Iron Bridge Lending. If you guys have not reached out to Iron Bridge already to talk to them about funding some of your upcoming flip projects, I highly encourage you to do so. I've known the owner of Iron Bridge for a very long time. I personally borrowed millions of dollars from them over the years to do a number of different projects, and I can say without a doubt, they are the best hard money lending company I have ever come across, and that is the reason why they are the sole sponsor of this show. I've had a lot of other companies reach out to me and and want to sponsor this show, but I just won't do it. I feel like I need to be genuine in who we have sponsoring the show, and it needs to be somebody that I've personally done a ton of business with. So I personally vouch for their ability to be the best, hands down, in the world of hard money lending. You won't find better programs, you won't find better terms, and they're lending or will be lending in over 20 states. So chances are, if you're hearing this in whatever state you're in, it's definitely worth it to check out their website, reach out to them, see if they're lending in your state, and if they are, I would absolutely encourage you to do business with them. Another very cool thing to note is that they have a program for most rehabs where you can actually borrow up to 90% of the purchase price. Now, this is given the fact that you are actually buying a deal, which if you're listening to the show, that means you probably are. But if you have an actual deal on the table, they'll fund up to 90% of your purchase price, and they'll even give you rehab funds on top of that, which means that it only takes 10% down to get into a project, which is unbelievable in the hard money world. So do yourself a favor, reach out to Iron Bridge Lending, have a conversation with them, see if they're a good fit for you and for your next project. I can guarantee you that you'll be happy that you did.
So what is your operation look like right now?
Basically, I have two other partners. They've been in the wholesaling business for about probably 8 years, and I was in finance before I got into the really off market. I've always had a real estate license, lived in New York, was doing about 10 deals a year just from like COI and referrals, really just focusing on finance. And then I got down here. My wife is a big real estate agent, does probably $20 million a year. So I kind of went with the route. I was sick of finance, got into residential, just kind of, it wasn't not my style. Like, I don't really like doing stuff like that.
And where is down here?
I'm in Florida now, South Florida, like Tampa Bay, Sarasota area.
Cool.
So I met these guys. I was walking out of a closing actually at one of my residential deals. And I was like, man, this guy's in like sweatpants and a t-shirt, like, and I'm sure his check's a lot bigger than mine. Like, where I'm like, what? Yeah, what do you do, man? He's like, I wholesale real estate. I'm like, I'm good at prospecting. So like week 2 went by and then we connected. And then about 7 months ago, I started working with them, came on as a partner. I just like lead generation. So that's kind of where I am right now.
Like, what do you think is setting you apart on converting these cold call leads?
I think it's just being consistent. I think a lot of people have the mentality of this being a one call close game. Like they think they're going to get a lead and they're going to make a call and they're magically going to convert 1 out of every 5 or 6 leads that come in on their first call. I mean, it's really, for me, it's just a consistency of my follow-up. I mean, even when I get a no, there's still 10 or 15 more touches to make sure that just that they don't need anything, right? Hey, what do you need? I know you might not be selling to me, but is there anything I can help you with other than me selling you on purchasing your price? Or are you looking to get full market value? Great realtors that can work with you to get top dollar for your house. But it's just, I think a lot of people hear no and they get scared, right? They feel like they're going to bother somebody.
Yeah.
But no, there's always more to the no, right? People don't tell you all this information about their property and say this, that, and the other if there's not something that's triggering them to consider selling one way or another.
100%. I love that. And then from when a lead comes in, what do you think your average, lead to contract days is? So from a lead coming in to a lead being under contract, what would you say the average timeline is for that? If you had to guess, just ballpark.
Roughly, it's gonna be 25 to 30 days. I mean, obviously you get the home run sometimes. You get ones that you call them and you send a contract over the phone.
Yeah.
But I'd say 25, 30 days. I mean, I'm touching them probably 10 times pretty hard before I get to the point where there's like the rapport there and they're like, okay, he's a real person. I get a lot of people calling me saying they're going to do this. This guy's called me every single week when he said he's going to call me.
Yeah.
So.
And then if a lead comes into your system, the notes look good, everything looks good, but you're having a trouble getting contact with them. How many times are you reaching out to them?
Until I get in touch with them. I mean, when a lead comes in, I'm reaching out to them for 3 days until I get some type of contact.
Yeah.
Once I have contact, depending on their motivation, my temperature will change. But the first week and a half, even after contact, I'm touching them every 3 days based on what's going on once I talk to them.
Gotcha.
And then after the conversations and I really get their motivation, it just depends on each person. But if I don't get in touch with them, I'm reaching out for the first week, like probably first 7 days, I'm reaching out every day, 2 to 3 times a day.
Gotcha. And then what are the numbers, the KPIs you're looking at to say, okay, cold calling is going great this month or cold calling is terrible this month? Is it leads and deals? Is it leads? Is it deal? Like what is it?
For
What
me, it's the pipeline, right? Because this is gonna take 90 days to really take off, is the reality. Like, I'm not gonna like me signing 2 deals and closing one already is just I wasn't expecting that. I went in going in to really fill my pipeline. That was my number one goal, and to get my pipeline to the point where at any given day I can get a contract signed. So that's really my mentality. It's a marathon, right? Like you're gonna get deals if you do it the right way. But I want it to the point where in 90 days I know I'm closing 3 to 5 deals from the call center
Yep, I love
consistently.
that. And any other tips you would give someone that's starting out with Call Magic or a different lead provider for cold calling on making sure that you're optimizing the leads that do come in and taking advantage of the because I mean every lead is a potential either a listing or a wholesale deal. So any other tips you have for someone that's just starting uh,
Um,
cold call
I mean,
leads?
just just to stay on the leads, don't let the no discourage you is my biggest tip. Like everybody's first instinct is to tell you no, right?
Yeah.
Because if they tell you no, they think you're never going to call them back because 90% of the people that get told no don't reach out again. But you don't have to go and try to give a hard sell after somebody tells you no. Come from a place of gratitude almost and just say, "Hey, I know you're not interested in selling at this time. Just let me know how I can help." And I do that a couple times. Hey, how was your weekend? Anything changed with the property? Any chance for me to come check it out? And it's kind of just simple little touches. It's not like over the top what people think that people are doing a lot of business are doing. I mean, it's just showing that you're a real person and just having some genuine like, hey, just checking to see how you're doing.
I like to
And
say like I think a no means more not today than no. And like I was talking at the conference this weekend and I was pretty much telling them like the goal of this is to get someone into your CRM and build rapport and make them trust you so that when a life event does happen, you're there to help them through it with their property. So
yep.
I love that.